Howdy, who all my stock market gamblers. Welcome today. I'm Tall Mike. Monday, stock market back opened. All right, so what's going on today? Dow Jones was down about 400 points earlier. We're down only about 200 now. Now, there's good news if you're long the market. I do think we're going to get a bounce from here. We've come down. We filled the gaps on the QQQs, the SPYs, filled those gaps. We're right at the lows, but I do think we're going to get a bounce off this level. Now, we just gotten too negative. We've gotten too oversold. Now, they come out with the survey, the American Association of Investors. Now, only 19% of investors believe that there's going to be a rally. 43% think we're going to have the crash. Well, I think it's time for a bounce. I think we're oversold. I'm actually taking my short positions off, putting on long positions on the QQQ, playing for a bounce. Now, the bounce will probably only last a day or two. I expect a bounce, though, and maybe we get 2-3 days of a bounce, and then I do think we're going to come and make some new lows. I think we're going to actually go lower. We'll see how it plays out. Maybe we get a capitulation day, and then we head up higher. Okay, so let's move on to the real estate market. In the real estate market, we are just getting a lot of price reductions, and I believe this is the start of what I call the death spiral. Okay, let me explain what I'm talking about. Right now, 1 out of every 8 listings has had a price reduction. Now, in my area, those price reductions are averaging about $90,000, which is just crazy to me. So we're getting these price reductions, right? And these price reductions, they're the most we've had in the last 6 months. You know, you go back 6 months ago, there wasn't price reductions like this. There's a lot of price reductions right now. Now, we're coming into the strongest selling part of the real estate year. I mean, we're coming into the spring months. We're in April, May, and June. Those are strong selling months. Why all the price reductions? Well, it's because we have a problem. Now, people tell me there's no problem. There's no problem, Mike. This time it's different. Matter of fact, people are telling me that no one's ever going to sell a home again. They say they're locked into these low interest rates of, you know, the 3% interest rate. And now it's 5%, Mike, so nobody's going to sell their home. Well, I'm telling you, people have to sell their homes for many different reasons. Okay, so well, they get relocation on their jobs. They got to sell their home, right? They upsize, they downsize. They're selling their homes. I'm telling you, there's a lot of reasons. Death in the family, people sell the home. There's so many reasons that people sell the home that you don't think about. So yes, there's going to become homes for sale. But now, are they going to be able to get them sold at these high prices? We are at record high prices. I mean, it's incredible. You know, over 400,000 is the average home price in the U.S. now. Really astonishing to me, but okay, so let's just talk about this from a purely mathematical equation, okay? I'm good with numbers. You can't argue with numbers. It's just math, right? So most people buy a home with debt. They buy a home with a mortgage. Now, it is true that 30% of homes in the U.S. are paid for, but the other 70%, they have mortgages, and new people coming into the marketplace usually buy by getting a mortgage. Okay, so let's say you're buying $1 million home, and let's say you were buying it a couple months ago, and interest rates were only 4%. Okay, actually, they were down at 3% just probably 6 months ago. Let's say at 4%, $1 million home, and let's say you're not putting anything down, just to keep it simple. All right, so your interest payment every year is $40,000. Now, okay, that's cool, no problem with that. But let's say that's all you can afford. You see, most people stretch to get into a home. They buy the most home they can afford. They go to the mortgage broker. Mortgage broker says you can buy $1 million home if interest rates are at 4% because you can afford to pay $40,000 a year in interest. Okay, so you're buying the $1 million home for 4%, $40,000. But what happens when interest rates go up to 5%? Okay, well, 5%, that $1 million home would be $50,000, so you couldn't afford it. So the seller, he runs out of buyers and he has to lower it. Now, he has to lower it to where that buyer can only afford $40,000, and so he's got to lower his home. So at 5%, how low would he have to lower his home? Well, the buyer can only afford $40,000, so he'd have to lower it down from $1 million down to $800,000, so that would be $40,000 a year interest. You following the plan? Now, this is very oversimplified. I'm just explaining how this works. Okay, so he'd have to lower it from $1 million down to $800,000 to get that buyer to be able to afford his home. You see, we have this so-called affordability crisis in the housing market in the United States. So he'd have to lower his home from $1 million down to $800,000. Okay, well, that's all good. Okay, so now that buyer can buy his home and take that one off the market. But what about the next one that comes on? Well, he sees his neighbor's got $800,000. He goes, wow, okay, I guess I'll try to get $800,000. But by the time he puts his on, interest rates has raised up to 6%. All right, well, at 6%, remember the buyer can only afford $40,000. So he would have to lower his down to $700,000, which would be actually about $42,000 a year payment. So you see, the stepping stone goes from $1 million to $800 to $700, and that's just because interest rates are going up. Now, when the other people start to see the neighbors getting out of the market, they're going, well, wait, I thought I could get out at $1 million. He only got out at $800,000. Oh, but the next guy, he only got out at $700,000. Oh no, maybe I better hurry up and get out, but I got to come in below the $700,000. It's the death spiral in the housing market. It's downward. Now you had that circle up where every sale was above the other, above the other, above the other. But it's starting to shift the other way. It's starting to go from the seller's market to the buyer's market. The shift is starting to happen. Now, this is just my opinion, and this is how it works. Now, my opinion is that $1 million house will soon be $700,000, will soon be $600,000, will even be down to $500,000. Now, this can happen relatively quickly. You see, what I believe is that it's already happening, but people just aren't realizing it. You see, when we went from 3% to 5%, well, that's where it happens, okay? The buyers can only afford so much. They're levered out. So, yes, there's still some buyers that have what I call the stupid money. They're filthy rich, and they just will pay anything for a house, okay? The dumb money, if you will. Well, that dumb money's starting to run out. There's only so many of them. So some people, you actually have to do it on affordability. And if they can only afford $40,000 in interest a year, then that's all they can pay. That's all the mortgage broker will give them. So that's the most they can pay to hit that buyer. You're going to have to lower the price of your house as the interest rate goes up. It's just common sense. It's just numbers, right? But once again, people, this is not the last chance to buy a house. Don't get into that FOMO stuff yet, fear of missing out. You will get many opportunities, and I think you'll get a much bigger bargain. Now, I want to talk about something that goes on in California. We have what's called Proposition 13, okay? Now, that states that when you buy a house for $1 million, your property tax is basically 1.2%, so $12,000 a year, okay? So $12,000 a year. Now, let's say that $1 million house did go up to $2 million. Well, your property tax can only go up 2% a year, so it doesn't go up. That's called Proposition 13. Now, there are people that bought their houses for, let's say, $20,000, and they're now worth $2 million. Well, their property tax is down here about $500 a year, where the guy that comes in and buys their house today would be paying, $2,000 a month, $24,000 a year in property tax. So instead of the $500, it goes to the $24,000. All right, well, now we have this thing just instated this year, okay, it just got instated, and it's called Proposition 19. Now, Proposition 19, they've been trying to get rid of Proposition 13 for so long, and Proposition 19 is kind of how they're going to do it. Proposition 19, what it says is that when a parent dies and there's their sons and daughters, they inherit the property, they don't get to keep the same property tax anymore. So say the parent bought the house for, $20,000 and has a $500 a year property tax. When that parent dies and the kids inherit that house and it's worth $2 million, their property tax goes from $500 up to $24,000 the day the parent dies. All right. So now can the kid afford the $24,000 a year property tax? Maybe he can, maybe he can't. But either way, he's not going to be happy about that. My accountant talks about people sitting in his office crying because they didn't know this law got passed. You see, what happened is the realtors, and I am one, and we have a very strong lobby, but they got out and lobbied for this to pass, right? And Governor Newsom got on board with it, and they kind of slipped it into the people by saying that, hey, we're going to let senior citizens move, and they get to keep their same property tax base, but then and the real fine print, but when the senior citizen dies and gives it to the kid, the property tax goes to the next level. And I mean to market rent, market level. And this is causing a lot of homes to come onto the market. In California, it's estimated that this alone will bring on 100,000 new properties every year. So there's reasons that properties are going to come on to the marketplace. Now, I just wanted to get into that a little bit. I know not all of you live in California. That's just what's going on out here. There's reasons that properties are going to be coming onto the marketplace. A lot of it is, it's foreclosures. A lot of foreclosures are going to be coming on. A lot of it is new construction. New construction is going to be coming on. They're building 1.5 million homes. In foreclosure right now, we've got 1 million homes in foreclosure. That's going to hit up probably over 5 million, maybe as high as 10 million once they make people start paying again. Look, there's a lot of reason that houses are coming onto the market. Don't get into this fear of missing out going, oh no, I can't buy a house. I'll never be able to get one. Yes, you will. And I think you're going to be able to get one at half off. Now, I hope some of this made sense. I know it was kind of a convoluted rant, if you will, on a Monday. But if you like this stuff, give me that thumbs up. You really like it, hit the subscribe button, because this is what I talk about. This is what I love to talk about. But get out there. Have a great Monday, everybody. We'll talk again real soon. Bye-bye now.